Hello and welcome. My name is Dr. Fred Sutton, and in this video I'll be presenting problem 6-27 on page 245 in your Accounting for Managers textbook. We'll be going over some activity-based costing in this problem. As you can see behind me here, I have the information that we're going to use for the problem. I've written this out to save some time. I've also put the customer types, and I've also actually added the sales around the table there. I'm going to go ahead and read through the problem. You may turn your books to page 245 and then follow along with me as we read the problem here. So customer profitability analysis, originally activity-based costing. Kronecker Company, a growing mail order clothing and accessory company, is concerned about its growing MSDA expenses. It has therefore examined its customer ordering patterns for the past year and identified 4 different types of customers, as they are illustrated in the table below. Please take a look at that table down there. Orders are taken by mail or over the phone. Kronecker maintains a toll-free number for customers to use when placing orders over the phone. Kronecker prides itself on its personal attention. It provides shoppers who order over the phone. All purchases are paid for by check or credit card. They have a very generous return policy if customers are not satisfied with the merchandise that they receive. Customers must pay return shipping charges, but their purchase price is fully refunded. So take a look at that table there. As you can see, I've already put the initial sales up here. I will then put we're going to take away the returns. It will, as we move through the problem. So on page 246, if you want to turn to that side page, we take a look at that. So on 246, prices are set so that the cost of goods sold is on an average of 75%. So when we have 75% is here as our cost of goods sold. We'll take a look at that in just a few moments. Customers pay actual shipping charges, but extra processing is required for overnight delivery. So we'll take a look at that here. They have developed the following activity cost driver rates, and they are supported in the table on 246 at the top of the page. Take a look at that. We're going to use some of that information in this problem, and I'll go over it when it comes up. Okay, so what are the requirements for the problem? Let's take a look at this. Using activity-based costing, determine the yearly profit associated with each of the 4 customers described. So we're going to take a look at each of these here and figure out what they are. We're then going to comment on which customers are most profitable and why. And then C, what advice do you have for this company regarding managing customer relations with the different types of customers presented? All right. So those are the things that we're going to go over in the problem. All right. So as you can see here for that table, I pulled the sales here. And so now what I'm going to do is I'm going to take away the returns. As you can see, there gives me a number of items returned. I'm not going to worry about that so much, but I want to look at the dollar value of items returned, which is on the 3rd line of the table on the bottom of page 245. So I have $200 here, $500 here, and then $1,500 here. Okay, so what I will do is take away each of those and get my net sales. All right, so now we have our net sales here. All right, so now what I want to do is then the cost of goods sold of that, we'll take 75% of each of these to get my cost of goods sold. So here I would have 750. This one would be 600. This one would be 1,500. And then lastly, what we'll have is the 1125 for the last one. All right, so now we're going to take a look at the next part here, which is processing mail orders, and there are $5 per non-phone order. So basically, the non-phone information there. So on the first one, as you can see there, time spent on phone placing orders, 0.25 of an hour. So what we're going to do there, excuse me, I'm going to slide up to the other part of that. So orders per year, number of orders per year. So we have 1, and then number of orders are 1 for phone, so therefore we don't have any mail orders. We'll get down to this one in just a moment and do the phone here. So on the next one, then it says on customer type 2, we have 6. So we have 6 orders per year and 0 by phone, so that means all of them are done electronically. And so we'll take the 6 times the 5 here, which gives us 30. The next one then, again, we have 4 in customer type 3 orders per year. Multiply that times the 5, which will give us 20. And then lastly here we have 12 orders per year, and then 12 are done by phone. So all of them are done by phone, so we're not going to worry about that. It's going to be at 0 then. All right, so let's do the processing orders by phone. So we mentioned that we get 1 number of phone orders per year, and they spent 0.25 hours time on that. So 0.25, I'm going to multiply 0.25 times this. That gives me 20 for that customer type. And then, if you remember correctly from this here, all of these were done by electronic. For both of these here. So I'm going to have 0 here and 0 here. We had no phone orders on either one of those. And then lastly, we have a customer type 4. We had 12 orders that year, and 1 hour was spent on those. So with 1 hour, we'll have $80. So it'll be 1 times the 80, which will give us 80. All right, now as we're taking a look at this here, we're going to process the returns. So let's take a look at the number of returns that we've had here. So on this, on these problems here, you can take a look at the return items. So on the second line, number of items returned, we can take a look, and this shows a 0 for customer type 1. So therefore, well, we have 0 that we're going to put in there. Didn't have any return. The second portion here, we had 4 returned items. And so since we had 4 returned items in customer type 2, we'll multiply the 4 times the 5 that we have here, and that gives us 20. Okay, as we're moving through this problem here, we're going to put all this together at the end. So now let's take a look at the next one here. We have the customer type 3. So we have customer type 3. We have 2 of those. So with 2 of those, we're going to multiply it times 10. Or excuse me, 5 gives us 10, I'm sorry. And then lastly, let's take a look at the last one. We have 24 return items. So we can see this customer type 4 likes to return lots of items. So we're going to take that 24 and multiply that times 5. As we do that, that should give us 120. All right. So now we've done the cost of goods sold, the processing of the electronic orders, the processing of the phone orders, the returns. Now let's take a look at the overnight delivery requests and how much they cost. As you can see, they cost us $4 per. So let's look here at the table at the bottom of page 245 and figure out how many of each of those we have. So on the first one, we have 1. So that'll be $4. The second one, it shows a 0 there. In the third one, it also shows a 0 there. And then the fourth one, it shows that we have 12 overnight deliveries. So we have to multiply that by 4. That gives us 48. All right, so we have all of those completed. Now let's think maintaining customer relations. Now, if you look at the table on page 246, at the bottom of it says maintain customer relations. So the time spent basically in catalogs and responding to customer complaints, comments and complaints. We are going to put that over each of those. So it'll be $50 for each of those that we have. So I'll add those in. All right. So let's figure out our profit. So you want to basically take the 1,000 net sales minus the 750 minus the 20 minus the 4 minus the 50 here. So as you're figuring out all of that, that'll give you your profit. So if I have the 750, that gives me 800, and so that 820 is basically 824. It looks like is my expenses there. So my profit would be 176. Take a look at this one here. So I have 600, 630, 650, and then 700. So 700 minus the 800 gives me 100 as my profits. All right, so let's take a look at this one here. I have 1500, so it's 1520, 1530, 1580. 1580 minus 2000 will give me 420. All right, so lastly here, let's put this all together. I have 1125, that gives me 1205, so that will give me 1325, and 1325 and 50 more gives me 1375, and I'm going to add 48 to that, which will give me 1423, which that 1423 would come up to $77 of profit. All right, so that's how we figured out the profit for each of those. As we just take just a real quick look at this, we'll see that most of our profit is here in the 3. We'll take a look at all these because we're going to compare the sales versus each other also as we do problems B, and then also take a look at C. We also see that we've done really well in most sales is here in customer 4. The problem is our profit is so much less. All right, so what we're going to do in the last part here is your profit divided by sales. That way we can figure out what is the most profitable. So I'm going to go ahead and put the information down here. You can go ahead and take your calculator and take the 176 and then divide it by your sales. So I'm going to go ahead and do that there. So we have 0.18 for that one. We then have 0.10 here. 0.17 and 0.03. All right, so this is how you would calculate the first part of the problem. We take a look at the profitability analysis here. Actually, if you look, type 1, for the amount of sales we get, this we're the most profitable. Customer 3 is second. Customer 4 is way down, even though that's the most amount of sales that we have. All right, so let's take a look at the second part of the problem here and kind of analyze some of those things. So in the second part of the problem, it asks us to comment on which customers are most profitable and why. Well, this is the most profitable one here. As we take a look at that, reason being, this had the most amount of sales, which is great. The problem is that there are a lot more returns, as you can see here. This portion here, there's a lot more returns here. There's also some issues with process of overnight deliveries. These customers seem to want to have a lot of overnight deliveries, and it cuts into our profitability. And then also those problems with the returns. So those are some of the things that I would look at as if I were the company and take, okay, what can we do to adjust some of those things there? And maybe some of the things that we'll talk about that in the third part of the problem on what we can do. So the most profitable one will be here. I would analyze each one of these and take a look at these here and what the issues may be for each of these. But as you can see, these two types, because primarily most of them there, both of them have more of the electronic, which costs us a lot less here. Where this one here, it costs us a lot more for the processing of the phone orders. Now in the C portion of the problem, it asks us, what advice do you give the company regarding managing customer relationships with the different types of customers represented? So one of the things I'm just going to target first is just taking a look at this here. There's a couple things that they can do right away and try to help with this here. As you can see, those returns were pretty high. So in those high returns, what you can do is you can ask those customers, why are they returning these items? So maybe we can lower some of those costs that we have as a part of that. Because processing and all those can be quite expensive. Second, we can also start charging them the same area here for customer 4 for the overnight delivery. Instead of absorbing the cost for processing of that, we may charge them a shipping and handling portion of that to have it overnight delivered. And that may also help with some of those costs there and make this a little more profitable, because as you can see, this is where the problem is. The bad thing is more of our sales are in that category there. This is problem 6-27 on page 245. I hope you enjoyed this video. Please let me know if you have any questions. Thank you and good luck.